Long-term S&P 500 Index, SPX, chart analysis, navigating market fluctuations. In our previous update, we reported that the S&P 500 Index, SPX, had rallied by plus 0.87%, with the NYSE Advance-Decline line reaching a new all-time high, a positive long-term indicator. This week, however, we witnessed a minus 1.97% decline in the SPX following a presidential assassination attempt. Despite this setback, the rally appears to remain intact. Conservative S&P 500 strategy. The conservative S&P 500 strategy aims to shield investors from bear markets. Short-term declines are expected and should not trigger sell signals. Unlike the aggressive bull and bear report, which closely follows short-term indicators, the conservative strategy relies on long-term chart analysis and remains uninfluenced by emotional responses or news events. This long-term strategy is designed to accommodate market fluctuations without attempting to time every minor rise and fall. Currently, we maintain a bullish position in the Rydex S&P 500 Nova Fund, RYNVX, or similar S&P 500 index funds or ETFs like SPY. S&P 500 Index, SPX, and current chart analysis. Last week's update. As we reported previously, the significant issue of breadth not supporting the rally was resolved with a strong advance in the NYSE Advance-Decline line, breaking out to new highs. This week's market dynamics. The week following an attempted presidential assassination is not something we get to write about often, thank goodness. The strength early this week was quickly labeled a Trump rally, as many investors see the Republican brand of government as better for the stock market with less regulations, a bias towards big business, and hopefully lower taxes. However, the initial rally was short-lived, with heavy selling from Wednesday through Friday erasing earlier gains, bringing the market back to its usual volatility. Economic indicators and market response. June's Consumer Price Index, CPI, exceeded expectations, leading traders to anticipate improving inflation and 3 potential interest rate cuts by the Federal Reserve in 2024. John Hancock Investment Management's co-chief investment strategists, Emily Rowland and Matt Miskin, noted that traders are now pricing in a high probability of rate cuts in September, November, and December. The financial markets reacted positively to this news. On Tuesday, the Dow experienced its best day of 2024. Fed funds futures indicate a 90% plus probability that the Federal Reserve will start cutting rates at the September 18th FOMC policy meeting. Sector analysis, small caps on the rise. Small cap stocks might be the sector to watch. Tom Lee, head of research at Fundstrat, believes the iShares Russell 2000 ETF, IWM, offers a compelling near-term investment opportunity. Lee predicts that small caps could gain 50% in 2024. The sector is currently up only 6%, indicating significant upside potential. The lower-than-expected June CPI provides a favorable environment for small caps to rally. We have previously mentioned that rate cuts would likely trigger a rally in small caps. This week, small caps gained plus 1.74% on double the normal volume. Market expert Ed Yardeni also supports the view that this slow-motion melt-up has more room to grow, potentially surpassing the 6,000 SPX target for 2025. Market-moving economic reports released this week. New York Empire State Manufacturing Index declined to minus 6.6 in July 2024, with stable new orders and slightly increased shipments. Delivery times improved, but the labor market remains weak. Retail sales, unchanged month-over-month in June, with sales at gasoline stations down 3% and auto sales down 2.3%. However, sales excluding food services, auto dealers, building materials stores, and gasoline stations rose by 0.9%. Import prices, unchanged in June 2024, with a 1% decrease in import fuel prices and a 0.2% increase in non-fuel imports. Housing starts rose by 3%, reaching 1.353 million in June. Building permits increased by 3.4%. Industrial production, increased by 0.6% in June, with manufacturing output up 0.4%, mining output up 0.3%, and utilities output up 2.8%. Conclusion: the SPX position in this long-term strategy remains bullish. Aggressive traders should consider investing in the Rydex Nova S&P 500 fund RYNVX or other bullish S&P 500 index funds or ETFs such as SPY. By adhering to a long-term strategy, investors can navigate market fluctuations without being swayed by short-term volatility or news events.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.